All right, we're going to go ahead and get started here. Thanks for joining us for our PA Tax Credits webinar with Lindsay Bennett from KIZ Resources. For those of you that don't know IMC, we are a nonprofit organization that works primarily with the manufacturing community. However, we do also manage what is called the Keystone Innovation Zone within a Williamsport-Lycoming County area. So historically, these webinars were put on for mostly for that purpose, to give our KIZ clients an update, and we would have a representative from DCED joining us typically. However, none of those folks were able to join us this morning, so we let DCED off the hook. However, Lindsay will still provide an overview of the KIZ program, so in the event there is one in your area, you could look it up and possibly see if that's something you could qualify for. KIZ Resources has been a partner with IMC for the tax credit program for a number of years, and it has helped our clients file applications and take care of all the awesome paperwork that goes along with filing for these things. So with that, I'm going to turn it over to Lindsay. A heads up that we are recording this so we can view it in the future, anyone that is interested and those that were unable to join us today. And if you have any questions, feel free to ask those throughout the program, because as Lindsay goes over, if your questions about that particular tax credit, we'll want to make sure that you have your answers prior to us moving on then to the next tax credit. So with that, I'm going to turn it over to Lindsay.
Thank you so much, Lori. Thank you for hosting and having us available to go over these tax credit programs, and thank you for being available today. I'm going to go ahead and share my screen for our PowerPoint, and we're just going to get right into it. I do have a lot of programs to go over, so please ask questions throughout. Let me grab the chat box up here so I can kind of monitor that as we're going along. But like Lori said, my name is Lindsay. I work with KIZ Resources. I've been there since end of 2008, beginning of 2009. So I've worked specifically with the KIZ and R&D programs the most, and enterprise zone programs for the past 11 years. Our company started out of a group of accountants who had clients that were starting to earn these credits when they first started coming around. In 2006 was the first year for tax credit applications for the KIZ program, and we decided that we needed to do some more exploration, the owner of my company, on these credits, and help these companies of the accounting firm's clients navigate these programs. So our company kind of started from there, and now we work with all of the programs. So this is kind of a little list of the alphabet soup of programs that are available within Pennsylvania. There are more than this. These are some of the main ones that we work with, and we're going to go over a lot of that. So my goal today is to not bombard you with so much information that you're overwhelmed, but to provide you with enough information that you can kind of look and see these acronyms and understand what type of programs you can potentially qualify for. And then we can point you in the right direction of where to get help to actually apply for them and receive the credits. So the tax credit itself is different than a tax deduction. I always want to make mention of this. A tax deduction lowers your overall taxable income that you pay taxes on, but the tax rate still applies to that total taxable income, of course. A tax credit is dollar for dollar against what the actual tax liability is that you owe. So it's a little bit more valuable in that case, that you're not paying out of pocket those tax dollars at all to the state. In this case, we're talking about state programs. Those tax credits wipe away that tax liability. And if you had W-2 withholding, if you're an owner, or if you had made estimated payments for your business throughout the year, you can actually get a refund of those dollars. So we're going to go ahead and get right into the KIZ program. I'm not going to take a lot of time here to go over, all of the application process, but basically the KIZ program was started back in 2003 and end of 2003 and 2004's budgets is when the program was established, and they wanted to create kind of this great entrepreneurial network for different geographic zones throughout the state that were around and near Pennsylvania's great colleges and universities. So 29 zones were created at the time. 2 of them have merged, so we're down to technically 28 zones in the state. But the purpose of these was to kind of help foster innovation, stop some of the brain drain that was happening in Pennsylvania, where we're getting great education to these students and then they're going to Boston or to California or somewhere else to start their businesses or to work for another big company. So they wanted to kind of create this entrepreneurial ecosystem to get more of those individuals starting businesses here and to encourage small businesses and startups to hire our recent college grads. So these zones are scattered all throughout the state, and the biggest benefit, besides working next to other startups, getting the support of the economic development agencies that are local to you because you need to connect with them, the biggest benefit are these tax credits. So the KIZ tax credit you can earn year over year throughout your time in the program, and what it's equal to is 50% of the gross increase in revenue from year over year. So it's up to $100,000 per year in these tax credits that a company can receive. And typically a company can receive about 6 tax credits. Because the program is based on year over year revenue, your first year is your base year. You have to be located in the zone for a portion of a first year and then have a comparable year. So you don't start earning tax credits until year 3 of being in the zone. Each year there's $15 million available in the state for this program. It started out, they had 25 million allocated to it 3 years ago. Has it been 3 cycles? Oh, there goes my dog, I apologize. 3 or 4 years ago, it was reduced down to from 25 to 15 million. So we are requesting the state to reinstate some of that because there have been some cuts. But this year is probably not the year that the budget's going to be able to move, unfortunately, with all the other things going on. So to be eligible for this program, you do have to be located within the boundaries of the zone, not just a mailbox. You have to be physically located there, have your business there, have employees showing up and working in the zone. You need to be in operation for less than 8 years in business, and that's from your incorporation date. And then you also have to be operating within a targeted industry. They're very broad and general. The main industries are like advanced or diversified manufacturing, high technology or advanced technology like nanosciences, that kind of thing, defense contracting, some business services that are technical in nature, where you can have, some kind of IP, and then also life sciences is the other kind of broad industry. And then the last component is kind of the key thing. So you do need to have something innovative within your company. So something that you created, you developed. It doesn't necessarily have to be a patent. Of course, if you had a patent, that's great support. It could be a trademark. Again, that support that you did something unique and innovative if you have a trademark that your company is able to use. But it's your secret sauce, your intellectual property, whatever kind of makes you stand out from the other companies. So every year for this program, you do have to apply online via the state's Single Application for Assistance, which is DCED'S overall application they use for all the programs. So we're not going to get into the application process. I just wanted to give a brief timeline for a company. So like I said, you do need to be in the zone for a period of a base year, which could be a portion of a calendar year. It doesn't have to be a calendar year. And then all of a second year as your revenue increase year or your comparable year. And then in year 3, you do apply for these tax credits. The applications are due by September 15th of each year. I am expecting them to be available starting next week to start being filled out. The state has 3 months to review all of those applications that come in. There's only one person at the state that reviews them all. So she will be working hard, and this year she'll be doing them remotely, most likely. So that'll be another process for them to do that. You must be tax compliant in order to receive this tax credit, as well as any other tax credit in Pennsylvania. You have to be tax compliant with the Department of Revenue. And not just the company, but any owners who are more than 20% owners need to be tax compliant. The award letters then get mailed out on December 15th of each year. So the award letter that you get in the mail is just, it looks like a little piece of paper. It doesn't look all that important, but it is, and you need to keep a hold of it. So that's your actual certificate for you to be able to either use for your tax liability that's owed at the corporate level, or flow through to your owners, or it can be sold for cash into the company. The credits do carry forward for 5 years, a total of 5 years. So the first year that you're able to use it, which in this case, if you receive a credit in 2020, would be 2020, and then for 4 additional years after that. So you do have to file your tax return, your most recent file tax return, for the date that the credit falls into before you can actually apply to sell the credit. So that would be the 2020 taxes. The state will not authorize or work on a tax sale transaction unless those tax returns are filed. So the other key thing for a KIZ company is that they do need to be doing these KIZ force reportings every 6 months. So every January and July, you log into the KIZ Force system, which is a Salesforce system, and just report some general numbers about your company. The KIZ Force system is not audited numbers. The tax credit is based on the filed tax returns that's due September 15th. So the KIZ Force system separate is just a way for the state to kind of look at what's going on within your company, aggregate it with everybody that has a tax credit in your zone or in your region, and report that to the legislators or across the board within the whole program to keep support for the program, so that they can see that it is working, that people are hiring people, they're spending money on R&D, they're using the program for its intended purposes. So this is just an outline of the Williamsport Lycoming KIZ, which is downtown Williamsport. There's portions of along Reach Road that qualify, and the information is available on the IMC's website. So Lori is the coordinator for the Williamsport zone. Each zone has an organization and a person within the organization who kind of oversees the program for their region. And their job is to meet with the companies, know who they are, make sure you're actually working within the zone. So Lori would be your point of contact for any Williamsport companies, and the website's there for more information. And this again was just a little bit of information. Over the last 5 years, the Williamsport Lycoming zone has brought in over $500,000 in tax credits that were able to be monetized and put back into the economy, essentially up in the Williamsport region. So these credits can be significant dollars. I do think there's definitely still available space capacity within this program. Do we have any questions on the R&D? For some reason, on my share screen right now, it's not letting me view the actual chat, but if there's any questions, Lori, please feel free to pause.
Yep, I'm monitoring them.
Okay, cool. I'm not sure why it's not coming up. Usually it does, but right now it's not. Okay, and Lori's also answering about the zoning, so thank you very much. Okay, it popped up for a second. So I'm going to go ahead and move on to the research and development program. This is kind of the next program that kind of makes sense, especially if you are a KIZ company or if you're in manufacturing. There's a lot of industries that can really take advantage of the R&D program. R&D is not just somebody in a lab coat creating brand new, never before seen technology or never before seen medications or therapies for cancer research. It's not that kind of R&D. It is all of the incremental improvements to your product or to your process that's happening within your company. So those activities might be something that you're doing to make your product more cost efficient. Maybe you're trying out new materials to see what's lighter or stronger depending on what the product is. You're retooling something within your manufacturing facility to cut down on time, manufacturing time spent. There's all kinds of little nuances to the products or to the process of getting your product out there that fall under these R&D activities. There's 4 key components to knowing if you qualify for the R&D program. The first one is that you have to be at financial risk. So you cannot just be a fully funded firm. You're not on the hook for anything within the company yourself to fund your R&D project. So if you're receiving some kind of SBIR grant and you're getting reimbursed costs for your project, then that wouldn't count. However, if you are a contract manufacturer and you bid out on a fixed price contract and you're awarded, technically, that looks like you're being funded because you're doing something for a customer, but at the same time, you're at financial risk at the onset. If something goes wrong with the project, you had to retool something additional, maybe equipment broke down, you had to pay for additional things. You can't go back to your customer and ask for more money. Obviously, you're going to be confident and hope that the price you bid out covers all the costs and you make a profit. But at the onset of the program, if there's a chance for additional expenses that are going to come out of pocket, then that's as a fixed price contract, then you are at financial risk. The next thing is that the R&D activities do need to be based in physical sciences. So it's not just doing a market survey to determine if people prefer red over blue. It's something that's technological in nature and about what you're doing for the improvement. At the onset of the project, you do need to have some uncertainty. And again, it doesn't mean you're not confident that you're going to get there at the end of the day, but you have to, there is maybe multiple paths. You're not sure which direction you're going to get to the end result. And then there's a process of experimentation is the last key point, which kind of goes along with uncertainty. If there's experimentation, about the type of materials or the retooling, what makes things work better, then that supports that there was uncertainty as well. There are 3 main buckets of costs available for this program. The largest driver for R&D costs is typically the wages. The wages would be you look at all of your employees and any employees who are actually doing the direct R&D type work, as well as any managers. Maybe a portion of their time is spent doing some of these R&D activities, and so a portion of their wages might also count. If an employee, maybe you have an engineer or somebody, and at least 80 or 85% of their time is spent doing these R&D activities, then you can count 100% of their wages towards your R&D cost. The second bucket of costs is direct supplies. So that would be anything that's used up and wasted throughout the process. Most of the time that does fall in manufacturing. If you are a software company, there's not typically a lot of direct supplies in the software side of things. If you're just developing an app or doing some coding work, that kind of thing. And then the last bucket of costs is for subcontractors. So a subcontractor that is doing work for you, maybe you had to go out of house, whether it's another company or you're paying an individual on a 1099 basis, 65% of what you pay your subcontractors also counts towards R&D. But you do want to make sure that you're maintaining the IP for that. So this is kind of just a general summary. Most people that are just looking to get into this R&D program do not necessarily have not been breaking out those qualified research expenses, those QREs. If you really are having trouble sleeping at night and you want to do some studying on the Internal Revenue Code's direction guidance on what qualifies for R&D. It's IRC section 41. It goes into great detail about what R&D is with very, very good explanations. But in general, it's those 3 buckets of costs and how you're doing those activities and how they are contributing to an R&D project, whether it's for cost reduction or creating something new, developing something. One of the things that we've been working with is we have an online site available called the Research Expense Organizer, researchexporganizer.com, as you can see in the bottom of your screen there. What that does is it helps you to go through these categories of expenses within your company and get a good look and a good glimpse of what type of R&D money you're spending within your business. If you don't have great records, you can kind of look back through emails and everything to help provide some of that supporting information. There are 2 programs for the R&D credit. The one is federal. It's actually something that goes right along your tax return. So the federal program does have a tax credit for R&D activities. It's not capped, so whatever you qualify for, apply for, and qualify for, you can receive. There's a couple of more recent changes that happened. The federal program is a permanent program in the fiscal code. So it's something you can kind of rely on as a business to be able to take advantage of. Small businesses, which are businesses with an average of less than $10 million in sales, can actually use the tax credit, the federal tax credit, against their payroll taxes that the employers are paying. And they can also go towards the owner's alternative minimum tax. If you're a large business and the owner is subject to the alternative minimum tax, they cannot use the credit and a pass-through for that portion of the tax, but for a small business, they can. The federal program, of course, is for expenses that are occurring within the United States. So if you have subcontractors that live outside or work outside of the U.S., they wouldn't count. You'd only count what happens in the U.S. And on that tax return, there's 2 versions of this tax credit calculation. I'm not an accountant, so I'm not the most knowledgeable about how that all breaks down. But in general, the traditional method can potentially get you a larger credit. But if you are a business that's been around for 50 years, you're going to have to go back and establish a base as far back as 1983 when the program was established. And that might not be easy to do depending on how good of records you have from the 80s. But the simplified method just allows you to use 3 more recent years of R&D expenses to create your base average for the program. And again, the R&D program for federal purposes carries forward for 20 years. So it's really an asset on your books. If you're a small company, you can certainly use it for your payroll. But if you're hoping to get acquired someday, it can be an asset for a sort of an acquisition. The Pennsylvania program works similarly to how the KIZ program does. So the applications are due September 15th of each year. Hard and fast deadlines for those. There's no exceptions. The PA program is comparing your increase in R&D over an average of up to 4 past years. So this year's application would be looking at all of the 2019 expenses compared to 18 if you had only expenses in 18, or 18, 17, 16, and 15 if you've been in the program or been doing R&D activities that long. The application is done via the ETIDES system, which is the Department of Revenue's online system for all of their taxation, the sales tax, payroll taxes, all of that kind of stuff. So you complete that application online. You do need to provide that supporting information, the W-2 information of your employees, 1099 information for your subcontractors, details about the supplies, all of the supporting information as to why you deserve that credit. And then you do need to also fax in after you complete the application, either a filed federal application, if you filed for the federal program, your 6765, or a pro forma version of your federal tax credit. So that you don't have to file for the federal one if you didn't do that within your 2019 tax return, but they do want to see what those expenses look like on the federal form. So it can be a pro forma version. These awards, again, will get issued by December 15th of each year. You also have to be in tax compliance with the state of Pennsylvania to receive the credit. It can be used against your corporate net income tax, your personal income tax, or it can be sold for cash after you file your next tax return. They do carry forward at the state level for 15 years as well for the R&D program, so it's a little bit longer of a carry forward. The Pennsylvania program, of course, is only looking at expenses that are happening in PA. So if you have an employee that lives out of state and is working remotely, you can't count their activity for your R&D number. And same with a subcontractor that's in another state. The credit calculation for this, so it's looking at your increase in R&D, and then whatever that increase is for a large business is going to be 10% is what your credit will equal. The small businesses actually receive 20% of that tax credit. So for Pennsylvania, and I don't know if this was on the previous slide, I might have taken it out by accident. There's $55 million available in this program each year. That is maxed out every year, 100%. There are a lot of large companies that could eat up almost all of the credits themselves, like a Johnson & Johnson or Merck, Pfizer, those types of companies. But the small businesses, which Pennsylvania defines as having less than $5 million in assets. So you provide your balance sheet to prove that that's the case for you. You actually can receive a 20% tax credit, and $11 million of that $55 million allocation is dedicated specifically just to small businesses. So you're only competing with small businesses. That being said, since the program is over subscribed to, they do prorate the credits, so you will probably get less than what you actually ask for. Are there any questions on the R&D program in general at this time? I didn't see anything yet, but if you have questions, feel free to keep listing those. I'm going to continue on now. I'm not going to spend a lot of time here. I don't know if we have any nonprofits with us today, but the Neighborhood Assistance Program is a program the state has to help support nonprofits that are doing different activities related to affordable housing programs or workforce development programs, crime prevention, blight removal, that kind of thing. This year, they are focusing on any sort of COVID-19 relief efforts that are going on in your neighborhood, and giving some precedence to applications around that, as well as social injustice type programs and things that organizations are putting together to help fight that as well. So the way that this program works is the nonprofit actually completes the electronic single application for assistance, requesting an allocation of credits for their project that's addressing why there's a problem that they're working to fix. Their best way to get that allocation of credits is to actually already have commitment letters from businesses that are local to you that are going to donate to your project. So the donor doesn't have to give that money yet. What they're doing is providing a letter that says, we support this project, we feel it's needed. We're willing to give up to X amount of dollars if they're successful in getting this application to move this project forward. Then the state will provide, once the donation is made after the credits are awarded, the donor can give their donation anywhere between July 1st and June 30th. This program falls on the state's fiscal year, and the business will receive either a 55% tax credit or a 75% tax credit, depending on which program the company or the nonprofit was qualified for. The nonprofit has throughout the fiscal year plus 3 additional months, so through September 30th, to actually expend all of those funds on the project. these credits can be used, of course, with the business or passed through to the owners. That's typically what the businesses are doing if they're donating. It's because they're going to be able to use those credits, but they can be sold as well. And that happens sometimes. There's a food bank part of the program to support food banks. So some small grocery stores will give their, not quite expired food over to the food bank to give out, and they'll get a tax credit based on the fair value market of the food, and maybe not be able to use all of that, and then they'll be able to sell some of those credits. The application is open now through August 31st for the current program. So these are the 5 components to the NAP program. The first 4 are all for nonprofits, and then the last one is for for-profits. So that just is a quick breakdown of the percentages. 55% for most one-year projects. If you fall under certain categories, then you get bumped up to the donors receiving a 75% tax credit. And then the neighborhood partnership program, that again is for 5 or more year long-term strategic plan type projects that a neighborhood is doing in collaboration with some local businesses and things for more of a long-term project. And that can receive 75% of a tax credit for the first 5 years. And then if the program continues beyond that, it's 80% of a tax credit for any following years. The charitable food program is again just for one-year projects for any type of organizations doing those activities. The last one then, the enterprise zone program tax credits, is for building renovations, and that is for for-profits. So I'm going to get into a little bit more detail on that real quick. The NAP, like I said, it's for for-profits who are doing a project within a designated distressed community. So it's been designated either as an enterprise zone or a Keystone Communities Main Street program or Elm Street program, any of those types of designations for an area that has, a high low income rate or has great need. The enterprise zone project, the developer or the business who's renovating a building to help put some job sustaining or create new jobs that have family sustaining wage back into the program, into that building. So it's for a business moving into a building of some sort. It can be mixed use as well, but typically there's some sort of business that's going into the fixed up building. They can receive 25% of a tax credit up to a $500,000, so up to a $2 million project for those qualified expenses. Those expenses include any of the rehab expenses for the building, some soft costs like engineering or architecture or attorney fees, different things like that, as well as any other sort of land improvements, parking lot lighting features, HVAC, plumbing, all of that stuff, as well as even the acquisition of the building. Again, you do need to provide information about the job creation that's going to happen within the building to kind of give your project more of a better chance at receiving these credits. The project does have to take place within the state's fiscal year, so July 1st to June 30th of each year. The application again is open right now through August 31st. Especially this past year with some of the restrictions that everybody had to live with and figure out how to work with at the beginning of this year. In 2020, they do grant extensions if your construction project is not able to be completed. This is definitely a year where that came into play. So if you can't get all of your spending done by June 30th, you can apply for an extension with this program. This is a list of all of the things that need to be included on that online application. Some of it has to be uploaded separately, just like the KIZ zones. There is an enterprise zone coordinator for Williamsport, which I'm not sure if it's still inactive, but it was the city of Williamsport was the local coordinator there. If they still have an active zone, then they might. I forgot to look that up, but there are zones scattered throughout that qualify for these credits. So you need a letter of support from your coordinator, your local coordinator. You need to have talked with the regional DCED person so they're aware of your project. You need to provide good cost estimates because the credit is based off of a budget that you submit. And then the tax credits themselves, you get the actual certificate. So you get the allocation based off of your budget, but then you get your actual tax credit certificate once you complete the project and submit an audit, a checkbook audit to verify the costs that you spent the money where you said you were going to. If there's not any other questions, if you are interested in going after any of these programs, of course, please be in touch with us. We can help you through the process, but I'm just going to kind of keep going. The Pennsylvania also has this historic preservation credit. It's modeled after the federal program. The federal program's been around for a lot of years, and the federal program provides a 20% credit for the rehabilitation of a historic building. Pennsylvania has a 25% tax credit. So since it's modeled after the federal program, there's a few things that have to fall into place. First, your building does have to be located within a historic district and be considered a contributing building to that historic district, or it has to be listed individually on the National Registry for Historic Places. All of the renovation then needs to follow the Secretary of the Interior standards for historic rehabilitation. So you can't take an old historic building and make it look modern. You have to maintain the historical integrity of the project. So the qualified renovation is basically all of the hard costs to the building and some of the soft costs as well. Acquisition is not included, and there's not, parking lot features, those kind of things are not included in the qualified rehab costs. The project does have to pass what they call the substantial rehab test, which just simply states that basically there's a big calculation for it, but it's basically stating that you're going to spend more money on the rehab than on the acquisition of the building, or the value of the building. This application is also done for Pennsylvania online. Pennsylvania's program only has $5 million available each year, and they divide that equally among 5 regions of the state, so that they are trying to hit as many projects as they can equally all throughout. There's a maximum of $500,000 per applicant, but they will sometimes prorate that down so that they can serve more people in different regions. The Pennsylvania application process, as well as the federal application process, is a 3-part application. So part 1 is just confirming that your building is a historic building. It has that historic designation. Part 2 is all of your plans of what you're going to do to the building. So it's your architectural drawings, it's pictures of what the building's current state is, the list of materials you're going to use. It's a very detailed description of your budget and everything that you're doing to the building. Part 3 then, once you spent the money, is a verification that you did what you said you were going to do. So you're going to take the after photos and provide all that. There's for Pennsylvania purposes, there's an audit to verify the costs, that what was qualified versus unqualified costs. The federal program, it goes right on your tax returns then. To use the PA program can be used, of course, against PA taxes or sold. They both carry forward for 7. Well, actually, the federal program carries forward for 20 years. In most cases with the federal tax credit for large projects, there's a syndication process where you get a large investor who comes in that can use the credit because the developer can't necessarily use the credit, and typically that investor has an exit strategy within 7 years of using those credits. This next program, I'm just going to breeze over, just something that I mentioned. It is something that's available. There's both film credits and video game production tax credits under the entertainment side of the DCED at the tourism office. These credits just kind of help support those industries. There is becoming a bigger video game production industry in Pennsylvania where companies and students are leaving school and developing video games for various platforms. So this is just to mention that there are some of those programs. Resource Enhancement and Protection, or REAP, is an ag-related program. I don't believe we have any ag people on today, so I'll go ahead and skip over that as well. But there are programs to help support the farming industry, which definitely at this time is in need as well, along with most other industries with what's going on. The EITC program, so the Educational Improvement Tax Credit, is one of the state's most popular programs. What it does is it allows donors to support their local private schools or pre-K programs, or even the public schools through some educational improvement organizations that go into public schools and do different things like STEM or STEAM programs, and kind of redirect their tax dollars to those organizations. So it's a 75% donation if you make a 1-year commitment. Everybody makes a 2-year commitment so that you can get a 90% tax credit for the donation that you make to a qualified organization each year. An organization can actually, if you take advantage of all the various programs that are under this umbrella, you could actually receive up to $1.7 million in tax credits. So it can be very, very large donations. Individuals, and in the past, you always had to be a business owner in order to get the credits through to you individually, but now any individual with a minimum of a $3,500 donation can make these donations through these special purpose entities, which is just an entity that has been set up legally to do one thing, and that is to make education donations. Many private schools have these already set up, these types of entities that people can join and sign a joinder and basically get a K-1 with a tax credit for their donation. For the special purpose entities that we work with through the Central Pennsylvania Scholarship Fund, which their website is at the bottom of this screen, they can fund any school district with scholarships in Pennsylvania anywhere. They work with all of the schools throughout the state. The general timeline for this, if you are an organization that wants to be listed, or a private school that wants to be listed as eligible to receive these credits, you do have to apply to DCED each fall to be able to receive credits the following year. The donors themselves have to apply for an allocation of tax credits either on May 15th or July 15th. But if you are an individual or even a business and you're going to be participating through a special purpose entity, you don't have to worry about those dates, because the SPE is the one that has to apply and get their allocation of credits. And then you just join the SPE by November of each year. So any donation that you would make in 2020 to an organization like this would provide you a 2020 tax credit. There's no carry forward. These credits cannot be sold, so they do have to be used on your taxes. So you want to work with your accountant to make sure you're getting the correct amount of credits. This program is actually a federal program, Work Opportunity Tax Credits. I'm just going to mention it very briefly. What it does is it provides employers with $2,400 up to $9,600 in tax credits for hiring veterans or long-term unemployed or ex-felons, and there's several categories with this program. Those credits can be used against your corporate tax liability, or if you're a nonprofit organization and you qualify for these credits, it can be used towards the Social Security tax credit or tax liabilities that are owed. This program does expire at the end of this year, so it's only through December 2020, and then this program won't be available. But there are other employer-related type credits. Most recently is the payroll tax credit for maintaining your employees during the COVID pandemic. And that one is available right now as you're filing your no, not W-9s, your, it's not a P-100 either. I'm like blanking on the quarterly employer withholding tax returns, but those are due here within the next couple of days, and that's available right now. So once you get any of these tax credits, what's it good for? First off, if you do have any PA liability at the corporate level, you do need to use it first on your PA tax return. If you file a Pennsylvania RCT 101, you list the credit there, and you complete a claim form to mail into the state separately, or in order for that credit to actually be applied to your state tax liability. The credit can be passed through to owners. There's some rules about that. You can only pass them through one level. They have to be passed through based on the ownership percentage. So if you have multiple owners and not everyone can use them, you want to be cognizant of that as well. If the owner is married, to file your individual tax return, you have to file your Pennsylvania return as married filing separately. So in order to be able to claim the credit. So there are some stipulations with being able to claim the credit as a shareholder. If you want to sell the tax credit, again, you still have to file your tax return first. You have to be tax compliant. The state does not match up sellers and buyers. So you do need to have your buyer identified. And that's one of the services that we provide, is we have buyers all throughout the year that are purchasing these credits. The state does take 60 to 90 days to process these things, so it's not something that you sign paperwork and get a check for the next day. The state has to do their compliance review, and then the Department of Revenue manually goes in and moves the credits from your account over to the buyer's account, and that process can take up to 90 days. If there's a compliance issue, you have to resubmit paperwork, and that time frame kind of starts over at that point. But we help you throughout all that process. There is still some of these limited programs available. I just wanted to mention briefly, I know a lot of people have covered these types of projects. The Payroll Protection Program, I think, still does have some funding available if you have not applied for that yet. And it might be that the payroll tax credit is more valuable to you. So you want to check with your accountant before you do go after any of these programs and see what's going to make the most sense. The loan forgiveness applications are available online for both the PPP and the EIDL if you qualified for any of those. The state has released some additional funding things. There are some PETA loans and different things available now that are coming back up. And also the state has, the one grant program is closed for now unless they aren't able to give out all the funds, and they'll probably open a second round for companies that were affected and had to close, were forced to close, and now need to make some adjustments in order to, put some of the protection pieces in place for this COVID crisis. But there's also hazard pay grants that are available right now if you are an essential business that has stayed open and you're, continuing to pay your employees and are going to, support them and pay them a little bit more because of the hazard pay or the hazardous conditions that they might be working in. There are some grants available for that right now. Other programs in general, there are a lot of different things happening at the state. There are credits if you are a small brewer and you're purchasing equipment for your brewery within the year. There are credits for pretty much any industry and everything that you can think of. So we just really want to be a resource for people of where to find out some of this information, whether we're redirecting you back to the IMC, to another state agency, another economic development agency, that kind of thing. There are those federal opportunity zones where the people doing investments into companies that are located there can actually, forego capital gains taxes for several years. We work with an investment group through the Alleghenies Angel Fund who are actively looking for seed through mid-stage companies to invest in. So if you are looking for an angel investor, we have connections with some different investment groups as well. So we want to really just be a resource for you to help with your funding needs. KIZ Resources, again, we assist with all of the application process from start to finish. So we're not just waiting till you did all the hard work and coming in at the end and brokering your credit, where you want to, make sure that you're putting the best application forward, and help you through that process. We then can sell the credit. We have a list of buyers, and we work with that project those programs to make sure everything happens securely and as quickly as possible. We're based out of an accounting firm. We do not try to steal anybody's tax clients. We do not do any tax returns, but we do have a good knowledge of the tax code within Pennsylvania and know all the state officials to help these transactions go through quickly and as easily as possible. And we do operate on a success-based fee. So we're not going to take you down a path that you're not going to get a credit. There's no out-of-pocket upfront retainer fees. Once you're actually successful in receiving a tax credit is when we would charge any fee, and all of that is agreed to, of course, up front. So we just really want to be a resource for these programs. If there's any questions in general, anything else anybody wants to go.
Lindsay, I'll jump in here for a minute. Anne had asked, what are PETA loans? And just to clarify that a little bit, I had stated in the chat that PETA stands for the Pennsylvania Industrial Development Association, and there are one of those in each county. In a number of instances, they are typically with the Chamber of Commerce that works with that county, but not necessarily every county works that way.
Okay.
So, if you're not familiar with who is the PETA in your area, we could help you identify that, or a quick search online would probably help you find that as well. And to Lindsay's point about not stealing, tax clients from other businesses, we did have KIZ Resources work with one of our manufacturing clients for the EZP credit a couple years ago, and as she stated, they worked hand in hand with their CPA to get the paperwork done, and it ended up being a win-win for everybody.
Thank you. Yeah.
So does anyone have questions?
Those PETA loans, I believe they are typically at a very advantageous, rate and things, since they're somewhat state sponsored and stuff. So if that's something that you're interested in, for depending on what type of project you have going on, definitely Lori can make those connections. A lot of information today, so please reach out to either Lori or myself with any questions on any of the programs or anything I didn't cover. Just let us, please reach out with anything that comes up.
All right, we'll follow up with an email with the PowerPoint and Lindsay's contact information as it appears there. Reach out to either one of us with any questions. I had put some links in the chat here, so if you're not able to copy those and want them, we can get those to you as well. So if there aren't any other questions, thank you for joining us today, and we'll call it a wrap.
Excellent. Thank you so much, Lori.
Thanks all.